Hi guys, I'm back with another video, and today I want to share with you my crypto bear market strategy. I like to use this website called Look Into Bitcoin. It has many free indicators and charts to help me assess the market condition and also at which point of the cycle we are at. Disclaimer, everything I talk about on my channel is not financial advice. They are only for educational and entertainment purpose. Please do your own research before investing. So the first chart here is called the 2-year moving average multiplier. It has one green line and one red line. So the green line is the 2-year moving average, and the red line is the 2-year moving average times 5. So basically how you can use this chart is when the price of Bitcoin falls below the 2-year moving average. And looking at the past data, we can see that when the price falls below the 2-year moving average, generally it is a good time to start buying, accumulating Bitcoin. The second chart here is called the 200-week moving average heat map. So in each of its major Bitcoin market cycle, Bitcoin price historically bottoms out around 200-week moving average. So we can see that price of Bitcoin has been dropping and we are close to touching this 200 moving average. And this indicator uses a color heat map based on the percentage increase of that 200-week moving average. From both of the indicators, we can see that we are either close to touching the support line of the moving average, or we have already crossed below the moving average line. And these are indicators for me to start accumulating. If you look at the past data, we can see that the price of Bitcoin don't just shoot back and break its all-time high immediately after a bear cycle. It takes months and years to recover to its next cycle peak. That's why I want to share with you my strategy to deal with this bear cycle. We can also see from this indicator the date of each halving. We have been through 3 halvings so far, and generally the bottom of the bear cycle is 1 year prior to the halving date. So you can see here it's about 1 year. The halving in 2016, and the bottom of the bear cycle is around 2015 August September, and this one as well. If the same thing are to happen for the next cycle, the next halving date is estimated to be 1st April 2024, and so that would make the bottom of this bear cycle to be somewhere the end of the year to the start of 2023. So let me jump straight right into how I'm managing my portfolio in this bear cycle. So I've divided my portfolio into 6 portions, and you can see that the top 3 here, Stablecoin, Cefi Lending, and Algo stablecoin, they are basically all just stablecoin, and it's making up 50% of my portfolio. For stablecoin, I like to hold USDC as it's by Coinbase, and it's considered to be the safer option, and it's more transparent with its reserve and fully backed by the US dollar compared to other stablecoins like USDT. And it's also listed on most of the exchange in the trading pairs, so you will find it very convenient if you want to buy into anything. The next one on the list here is Cefi Lending. Instead of letting your stablecoins sit idle in a wallet, you can also deposit them into a Cefi lending platform. Basically how this platform works is you deposit your coins, and the platform loan it out to the borrower, and in return you receive some interest as passive income. I have a list of some of the popular Cefi lending platform here. You can see BlockFi, Nexo, Celsius, uHolder. And actually many of these platforms, they have terms and conditions for lending. And for example, you need to lock your tokens for a longer period of time in order to receive a higher APR. And some also have hard caps on the number of tokens for higher APR. And some platform like Nexo also pays you out higher APR, but in their own native token. So personally, I've done my research on in this area, and I'm using UHolder, which is offering a 12% APR on USDC with no lock-in period. However, they have a U limit of 25,000, which is for most users, and I believe most people will not exceed that limit. Third one on my list is Algo stablecoin USDD. So USDD is an algorithmic stablecoin by Tron, and it's very similar to UST. The difference is that it is designed to have a smaller market cap than its native token Tron, and also it holds a larger reserve, currently at $10 billion, compared to Luna, which only had $3.5 billion in its reserve before the UST DPEG. And for USDD, we can currently get an APY of around 20 to 30% on Qcoin, and also on Sun.io and SunSwap if you're doing the Stablecoin LP. But if you have lost all faith with algorithmic stablecoin after what happened to UST, then just stay away from this one. You can see what I'm doing here with the 50% of my stablecoin. It's instead of just letting it sit idle in a wallet, I'm also using platforms such as UHolder and Algo stablecoin to help me generate that additional APY. The next one on the list is dollar cost average. This is probably the best option you have in a bear market, as no one can perfectly time the bottom. Allocate your DCA amount based on how long you think the bear cycle will last, and do not overinvest. So on average, the Bitcoin bear market is about 300 days. I personally prefer to dollar cost average into layer 1 projects, as they have a higher chance of surviving the bear market and still be around in the next bull cycle. And I've listed the following in order of risk level. Of course, we have Bitcoin and Ethereum. And next we have so-called the blue chips of the layer 1s, BNB, Cardano, Solana, Avalanche. Then the next few are the projects which I feel might be undervalued in the bear market with good potential for the next bull run. So we have Near, Chronos, EGLD, and Phantom. And lastly, we have high risk, high reward plays, which I've listed a few here: Harmony, KDA, Moonbeam, and Moonriver. And you can allocate based on your own risk tolerance. Diversify, but do not over diversify. And 5 to 7 projects are a good number for me. Next one on the list here is farming, and I'm not talking about some Degen farming strategy that can give you very high APY, but instead I'm using two strategy that are lower in risk compared to the usual LP farming with other tokens. The first one here is stablecoin liquidity pool farming. This one has low to zero impermanent loss, as stablecoin are usually pegged at $1. And there are two platforms which I use to research this. The first one here is CoinDix. If you come to CoinDix and filter by stablecoin, you can see the base APY that these pools are offering. And generally, I tend to go for pools which is between 10 to 20% and with a higher total value locked. The next one here is Beefy Finance. Same thing, filter by stablecoin, and you can check the stablecoin pools and also the APY that they are offering. Yeah, and you can do your own research to find out about these stablecoin pools and invest based on your own risk tolerance. My second farming strategy is called the delta neutral strategy. You're basically opening a long and short position at the same time to minimize risk by staying on both sides. Of course, there are still risks involved. There are risks of being liquidated, but generally the risk is lower than that of the usual LP farming. I have listed a few projects here under the delta neutral strategy. The first one is Single Finance. This is the pseudo delta neutral strategy on the Kronos blockchain. And I think the USDC CRO pair is a good pair to farm on. And also on the Solana blockchain, we have Francium and Delta One. Currently on Delta One, there's no allocation left in the Solana USDC pool. And usually these pool sell out really fast once they open up more allocations. So you really have to camp for this one. But if you want to farm the Solana USDC pair, you can also do it on Francium. Yep. So actually on Francium, we can also farm with some leverage as well. And you can see as we adjust leverage, there's a simulator here to check your liquidation price. The last project here is called Alpaca Finance. This is mainly farming the BNB USDT pair with leverage involved. This is just an introductory video to show you some projects which you can make use of delta neutral strategy. And if you're interested in the future, I will do one video in details just on delta neutral strategy. The last one on my list is DeFi Degen Play, which should be the smallest and riskiest allocation in a portfolio. These can be meme coins, yield notes to rebase tokens that offers you 6 to 7 figures APY. It is the unfortunate truth that the protocols with Ponzi-nomics like these are everywhere in the DeFi space. But fortunately for early investors, you can still make a big win from these projects. Understand the rules of the game, get in early, and by early I mean at pre-sale or during the first few days of launch, and recover your initial investment and take profits along the way. And do not feel FOMO to buy when you see an influencer make insane profits from these projects. By that time, you are probably late and just providing that exit liquidity. So actually the shelf time of these projects is pretty short, so you can always get in early on the next one. Lastly, I will give you something extra, which I call Project X. From DeFi in 2020 to NFT and Metaverse in 2021. And these are the big things that happen in crypto in each cycle. And I do not know what is the next big thing in crypto, but I do know it's going to be something that's different or never seen before when the next bull cycle is here. So until the next cycle, I'm going to save one spot in my portfolio just for this. Of course, this portfolio here is my personal one. It's not financial wise, just for your reference. You can also have your own allocation, and you can also adjust the percentage here based on your own risk tolerance. Eventually, what I want to do is to slowly shift my stablecoin allocation into my dollar cost average projects as the market start to recover. Alright, that's all for today. If you like my content, please like and subscribe, and I will see you again. Thank you.